Right. Thanks very much for that, Vivek. Let's talk about the investing in landscape right now. A special guest joining us today, Nitin Jain of Edelweiss is here with us. Nitin, good afternoon. Thank you so much for your time. Let's start by understanding the new fund which you guys are planning, the long short fund. What's the hypothesis behind this new one? What exactly is the thinking when you back tested it? What did you find it will apply in this kind of a market?
Yeah, first of all, good afternoon, Ajay. And I think I must share that it's actually a very simple long short hedge fund. And I think it's interesting that globally it's a very big strategy, right? Like in US, you would have $3.5 trillion of assets under management. In China, you would have around $600 billion of assets under management in long short. But somehow in India, even today, I think we think there's hardly more than maybe more than $1.5 billion of assets under management in active long short strategy. And I think the root of that is probably that returns, especially in the fixed income space, historically have been quite high. But as interest rates have come down, as you see that the fixed deposit rates are maybe 6%, post-tax is 3.5%, 4%. And even when you look at equity returns, I think though the returns are reasonably good, maybe 12 to 14, but the kind of volatility that people have seen, allocations can't exceed beyond a point, right? So people are looking for products which can give returns which are somewhere in between 9, 10, 12%, but the volatility is contained. And that is what I think edge kind of a product delivers to our customers. Returns in the range of 10 to 14%, but volatility which is significantly lesser, drawdowns which are much lesser than what index delivers. And we think that there is a tremendous appetite for that kind of a product. But the core is that capability, and I think we are very lucky to have found a fund manager and a team which is competent on delivering that.
Right. No, fair point. Yes, it's a roaring bull run out there, and though we may have different opinions on what stage of the market is it. Clearly, volatility is something which takes a toll on investors. But what's your analysis of the phase of cycle? You've seen so many cycles before, Nitin. The way macros are falling in place, earnings, etc., government push, expansionary budget, all of that. What stage of the market cycle are we in?
I think it's one thing I must say that this kind of a rally has surprised the biggest veterans of the market. Okay, I think we have seen everything that we could have possibly seen in our lifetime. We have seen 7,500 in Nifty, and we have seen 15,000 in Nifty in the same year. Something that none of us predicted, right? So I think overall we are extremely bullish on the market. So there is no doubt about that because something has changed in the last 6 months, and I think a lot of credit for that has to go to RBI. I think the way they handled the crisis. I think I was quite skeptical about how the companies were being dealt with and how the liquidity was not reaching, especially specific segments of the market. But when I look back, the way things have panned out, I think it's just fantastic. And I think a lot of credit to the schemes that were launched, both by the government and the RBI, I think have become very effective. And then you couple that with the budget that came out. I think a marvelous budget. And I think a budget 10 years down the line, when we look back, we'll realize really changed the trajectory of the growth path that India was on. So overall, extremely bullish. And I think we are, in my view, definitely stretched in even though because of this immediate bull run that the market has seen a 50-60% rally in a very short frame of time. But I would be surprised if Nifty does not deliver at least 10 to 14% compounded over the next 5-7 years. I've never felt so optimistic about the future given every piece of macro that we are seeing come in the favor of the country. So long term, very bullish, but the valuations, of course, make you feel a little stretched at this point in time in particular.
Right. Nitin, you also interact with a lot of friends and partners and associates from the international community. In fact, foreign funds have been big buyers in the last couple of months. Now you have a big foreign partner in your business as well. What are they really seeing in the Indian investment community, which Indian investors are actually missing out on? Can you elaborate, or can you share some insights on the conversations you may be having?
I think first of all, I must say that we have been very blessed that we have partnered with some of the best in the world, whether it is PAG, whether it is CDPQ, whether it is Allianz. Some of the finest institutions in the world have chosen us as a partner to invest in India. But having said that, I think most of these institutions have very long-term horizons when they think about India opportunity. And hence, if you think about 10, 15, 20 years, kind of demographics that we have in India, the kind of growth potential that we have in India, the kind of under-penetration that we have in every possible sector, I think it's a very, very compelling case for investment. I mean, just think about even financial services. Where are we today in terms of alternative asset management, for example? I mean, maybe we are 20, 25 years behind where US is. So now, people might argue that, we have grown at 25, 30, 40% in the last 2-3 years, and hence we seem to have overdone the growth. But the reality is we are still 1% of where US markets are. And that just tells you the overall runway that is available. So anybody who's thinking 10 years, 15 years, 20 years, India is not a story that you can miss. And add to the fact that there are very few democracies which are so large and vibrant, and where global money can really allocate and make judgment for 10, 15 years. And hence we find that a lot of FDI money will continue to come in, long-term money from pension funds, sovereigns. We continue to be very bullish on that kind of a money, flowing into India. What has happened though in the last 6-9 months, I think a lot of FII money has also come in, which I think is also partially led by the stimulus that you have seen globally, right? And that money finds its way in and will also find its way out. So I am not as sanguine about that part of the market, because that is quite volatile, comes and goes out. But I just feel very bullish about the long-term capital allocators being in India for a very, very long time. Ajay.
Right. All right, Nitin, on that optimistic note, I'll let you go. Thank you so much for chatting with us today, and good luck with this new fund of yours. Time for a short break. On the other side, we'll get you more management chat and some stock-specific stories.